Of course, that would be how I would start this off, right? No sound. Perfect. Anyway, sorry about that. Welcome everyone to the Kindle Report. Remember to subscribe, like, and share these videos. And I just want to thank everybody for the kind thoughts while I was off. This is an opportunity to kind of thank everybody and all the kind comments. But yeah, it'd be classic. I forgot to turn the sound on after all that. So what I was saying that you couldn't hear is that the last time I did a live stream was on 12/16 of December of last year. So it's been pretty amazing. It's been 5 weeks ago that I've been live. So anyway, so it's good to be back. Good to be feeling better. I learned a lot in this starting off a year on a rocky start. So you always wonder, I just cover this right up front. You always wonder what the hell happened when someone falls off the screen for a while like that. I had RSV, not COVID, and it's just a respiratory disease, pretty nasty, usually in infants and old people, which I qualify. So it was an interesting situation. So anyway, folks, thanks again for all the kind stuff. Yeah, I mean, a lot of love around here. Appreciate it. Hopefully we'll get we've only got 82 viewers. A month ago, we would have had 300-400. So I'm not sure a lot of folks, once you shut a channel down like this and try to come back, it's a slow comeback. So tell your friends. Probably, like I said, what I was saying a minute ago is we'll probably do at least one live like this a week, and maybe Wednesday nights will be a good time. So anyway, let's get into tonight's video. In last night's video that I released, I was talking about some really different things that maybe is not common right now. Everyone thinks we're having a technical rally and that nothing good is going to come out of the economy. And we'll go through a little bit of the yield curve tonight, some things going on there. By the way, after you get beyond the 2-year, for the most part, nothing's inverted anymore. I've told you before, and I'll just mention it right now, is the 530s is the metric I watch, and it hasn't been inverted for weeks. So this whole inverted yield curve headline, that's also something that's going to go down in the, I guess, in the history as similar to temporary. So let's let me get some of this stuff cleared up, what we have to deal with tomorrow anyway. GDP's coming out. I expected it up 2.7. I know I hate to say it, doesn't sound like a recession to me. It looks like, just a quick comment, that we did have a recessionary signal last year, but no, so far this year, I'm not sure we're going to be able to get to 2 quarters of negative GDP this year. And it just doesn't look like that's the metric that's happening. Just real quick, get through this. Durable goods coming out, expected to be up 2.9. Claims 205, continuing claims 1.647 last week. So we're looking at, it's under 2 million. That's all I really care about right now. New home sales are coming out. I expect those to be soft. The real estate has been really bad. I had intentions, just so you know, when I was on holiday break at the end of the year, I had intentions of really talking about something. I won't get in too much of this tonight, but really what we're seeing is a serious bifurcation of the economy, and it's going to be a really tough call. I think a lot of folks are going to be disappointed about the recessionary call that they're making, and and folks talking about 3,200 and lower. I'm going to reveal some new Fibonacci stuff. I mentioned them a little bit last night, but we'll go into more details. So I got a bunch of earnings. I think 187 earnings coming out. We had Tesla come out. Last time I looked, Tesla was, let me just see where Tesla is at. It is right now just up. It's up a bit overnight after the earnings, and everything that I guess was perceived to be negative has flipped to a large degree. And people are forgetting about the old saying. I'm not big on these metrics, but as January goes, so does the year. Right now, January is not doing too bad actually. So we'll see how we've got another week here to print up and see how this thing finishes off. But so that's all the basics. So let me go into a little bit more detail on what I was talking about last night. So a couple things. I made a reference of you can't get hurt falling out of a basement window when markets are in the basement. We rallied back in that fourth quarter actually really well, and it was pretty impressive actually as we came in to year end. Things stabilized. We finished down, I think, I'm going off memory here, around 14% on the S&P. We were down 23, 24 plus. So a lot of things recovered. And really what we're seeing here is that expectations got so bad. If you remember how negative that last quarter is, there's still a lot of folks out there. I saw some comments in the channel last night that, folks are really optimistic. I don't think so. Not if you listen to the talking heads. And I was joking last night. If you want to know if I'm right or not, just talk to Jim Cramer. I'm not sure what his opinion is. I don't watch Cramer, but it just was a snide comment, the reverse Cramer comment. But what I'm seeing here from an economic viewpoint is something really unique. And I think, and I mentioned last night, going back to the 1970s, and looking at what was going on there, primarily in mid-70s, things of that sort. I was in college at that time, so that was an interesting, just out of college actually at that time. So I was in the real estate business when I thought that was going to be my career until 1979 when interest rates started to drive up and went to 20%, completely destroyed the real estate market. But what happened back in those days was a normal interest rate going back. One of my college professors, a guy named Dick Adamitis, he used to preach about understanding interest rates. And he got me following the Federal Reserve. The Fed used to put out an insane amount of documentation, of articles they would write, research. It was amazing. I had all these essays and books. I had boxes of these things. I ordered everything I could. So it was kind of an education. So you have to understand interest rates. And what happened back in those days is the economy, and I mentioned this last night, the economy is quite capable of running at these higher levels. People think, oh, we have to have 2%, 1%, 0. No, we don't. That's not normal. Normal is where we are right now, 4 to 7%. You see a spike up maybe to 9%, spikes back down to 3s, and you get this volatility here. But normal interest rates is a measure of relative risk. And it's what we've seen over the years is the Fed, constantly, let's say since Helicopter Ben and the QE started, that's what the expectation is. And that's why you see out there right now that everybody expects the Fed pivot. You don't hear it as much as you did, but this is still a big dialogue out there. At some stage, you're going to pivot. They're not going to pivot. Okay, so let's get that straight right now. Inflation is going to stay 4 or 5% for the as far as you can see forward right now, multiple years, I think. There's going to be embedded cost in the economy. We'll call it onshoring and all kinds of other things that are going to start to raise costs in every country, everywhere on the planet. Everything's going to be more expensive. So whatever you thought normal is, most of you, a lot of people haven't been around I started in the markets in 1979. So I started right at the peak of Jimmy Carter inflation and 16 to 20% interest rates. A lot of you folks haven't seen what things look like. I got a mortgage on a house in California I bought in 1983 for 13.25% and didn't even flinch. And the markets flowed just fine back then. So what I'm talking about right now, and I'll go a little bit on a rant because this is important. I've been, after being down for as long and having way too much time to think, these things come about. But what we're looking at now is the economy normalizing into more real rates that reflect the actual economy and risk and things of those sort. So cap rates in commercial real estate, all of those things, everything's going to have to be relooked at. and deals aren't going to look as good as they used to. But that doesn't mean there can't be activity in the economy. So things are have to be rethought. Hey, listen, a bunch of smart people on this planet. We have technology, we have everything. Hey, we have GPT, right? So anything's possible now, right? So the bottom line is what we're going to see is a morphing of the economy into, I think, forward-looking, something very different than looking in the rearview mirror. And a lot of us have maybe I'm looking way in the rearview mirror with a telescope looking back at the 70s, but what I'm talking about is at that point in time, interest rates weren't being manipulated at the level that we've seen since Helicopter Ben, since the GFC. All of those things haven't happened for a while. We think that's normal because that's what we've been living in for so long. And what I'm here to tell you is things are going to be different. Now, what kind of growth are we going to have? Those type of things, don't have a clue on that yet, but I do see a much different scenario. So you have to, when you're investing in stocks and things like that, you're going to have to look at different metrics and how companies are going to make money. If you have a company that's got a lot of debt and they're going to have to refinance, maybe they're not going to make it. Maybe there's going to be some washing out and thinning out of in the economy itself. So things are just going to get restructured. And these are high level thoughts right now. And I'm going to keep this theme for a while because it's one of these things where if you're watching what's starting to evolve here, it's going to get, this is early stages. Biden and the gang blew out our SPR, and now they're going to have to buy it back, and they're going to bid oil up. So there's going to be inflationary pressures. I'm not here telling you. A couple videos ago, I said inflation is the old story, and what I mean by that doesn't mean inflation is over. It's just that's not what market participants are going to be focusing on. I've said this forever, is that the markets can't chew gum and walk at the same time. They can only think about one thing. And if you look at the themes that flow around the markets and, debt crisis, that's kind of flowing out there. And you see a little bit of action by these jokers in Washington, D.C. But the bottom line is what we're really seeing is the messaging starting to change. So we'll see where this takes us. But I'm just telling you right now, don't think it's going back. It's not going back. It's going to something different. I think this is, I won't use the term the Great Reset, but I'm telling you things did get reset. And now the Fed is reset. And I think even future Fed are not going to go back to QE, not going back to MMT. We found out that MMT does exactly what we thought it did. It causes inflation. You can't just print money and just spend and print. So everything, like I said, I think I'm getting to the point. I'm in this loop right now trying to get out. But this is the point where everything is ultimately going to start to shift to something else. I don't have exact handle on what something else is, but I think it's going to be completely different. And once again, I'll just say it, don't expect the Fed to pivot back. So let's go ahead and get into the rest of the video tonight so I can move on. I did about 20 minutes on that little section there. So we'll get in. I've been anxious to talk about some of these other markets. It's just what's nice about the produced videos, you can zoom in and out. They take hours, 3.5, 4 hours to put together 10, 15-minute video. So, and I know this, and I'm also using some new software for that. So it's all really kind of wonky and clunky. So we'll see what happens. These are way too easy just to get on and talk. And it's just that people like the more focused videos. So make sure you let everybody know I'm back. Tell all your friends, and we'll go from there. So let's go ahead and let's start, and let's get into the Wavetech database and talk a little bit more about that. And then we should be able to move forward through all these markets fairly quickly. Okay, so here we are, 77.02. It's kind of an interesting run tonight. We got 131 buy signals, 167 sells, 7702. We're literally at 7701, I think, last night, and we're just floating back and forth. I think if you carried this out more than 2 decibels, the reason why it went from 1 to 2 and looks like it went up, it's just the numbers probably scooted just a bit above the midpoint and the rounding hit in. But the bottom line is, this is still a very, very interesting situation from the standpoint of the configuration on the models. The intermediate models are at 45%, well over 42. And this is my argument, and I'll just come up for a second here, is my argument for using the database is, you have to understand is that this is my product, my models, everything I designed. I was talking in the live room today, talking to folks, those of you that were there, is that the way that you actually have a real strategy, you need to be able to write it down. And to be able to create models, you need to do more than write it down. You have to build logic trees, all kinds of stuff. So it forces you to really solidify your thoughts. So I won't go on that riff, but what's happened, all 16,000 of these symbols are being made, being looked at that logic I built. So I know everything that comes out are things that I've kind of thumbs up, right? I've already approved these things. So these are the modeling. And not only that, this has been around, the first version of this was built in actually 1995, okay? So this is when I built the first version, but the models themselves were actually built in 1990, 91, and the research where they came from back in 1986. So these are my entire career that you're looking at when you see this stuff. And the importance of this, and this is what I told you just briefly, I look at the markets differently because of this. And when I see 77%, 7 out of 10 stocks in trend mode, and you're telling me the market's going to collapse tomorrow, I'm like, no, it's not. It's not going to collapse. If you notice, and I'll go through the details here on the S&P traded down to, I was talking about getting down to maybe 37.50 or so. I believe the futures printed 49, and we rallied 70 points off of the lows. So there's still buyers out there. And what's going on in the markets, and that's why this database is important, is what you're seeing is there's lots of folks looking to put some money to work. And if you also look, and generally speaking, there's a lot of cash on the sidelines. So regardless of what the reason is, the fundamental guys will start to tell you that, hey, nothing, this is, they'll start talking about the earnings numbers and the multiples and all that crap. That's never made anybody any money. Maybe longer term you figure out something, but it's what I'm saying here is that that's the rhetoric around the markets. That's where the guys that come on CNBs that want CNBC or whatever channel or anything, and they want to sound smart. That's what they talk about. In the end, a bunch of those guys, own a bunch of these dogs. What was it? The comment from Wall Street, just another dog with fleas. And that's what they end up with. And it's much different being a quantitative technical guy versus being that guy. So I'll just, but this is important from my viewpoint because I've watched this database. Literally, the very first iteration of the full database was 1998 when we launched this product. Wavetech I call this is Craigslist for the markets. This is a very old platform. I always show this platform. I don't show our pro platform on here, but this is where some of the metrics come out that help you do this. But my point is that this is why I don't believe there's going to be some major decline. And 45%, I'm going to flip this over just real quick. I've got it on the big screen here. Sorry to get on rant. I haven't done this for a while, so I'm just going to go ahead and go, and you guys can pick and choose what you want to listen to or spin forward if you want. But let's just go to the weekly. And the weekly right now, a couple things are showing. We've got 8 of the 12 sectors are long right now. So they're trending, at least beginning to trend. You see most of these, I mentioned this last night, 3 of them have been on for less than 60 trading days, which is about 22 trading days a month roughly. And the rest have been 1 week ago. So these are all new signals. They're just beginning. And if you look on this column, let me go full screen so you can see this. As you look over here, it tells you how many of the average holding period there is here. So you're looking at 215 days holding. It's only 7 into this cycle. Most of these are 215, 170, 160, 275. So these are 8 of the 10. We still have energy was a great sector last year. It's not even long right now. It's flattened out. Financials are out. That was a great play, 21, and going back to 20, actually, the end of 20. And then we're looking at technologies flat and utilities are flat. So it's somewhat interesting and looking at this. So let's get into the technical side of things here. Okay, so we've got the daily chart up here. I think it's fairly interesting. As I mentioned in yesterday's action, we traded down. Let me look at the low was 63. I said it was 49. 63 here on the daily was yesterday's low. The STX was 65. So we printed STX and then rallied all the way back to an R1 plus. So, but I want you to see these dots above here. These are the Fibonacci targets. I know it's kind of small on the side to see, but I'll read them out to you. Is 4167 is high target 1, 4269 and 4232. Those are the current targets off the daily. And you could argue there's the previous target. If I'm going to draw this in just real quick, and then I'm going to go somewhat in depth here. And what I'm going to show you here is that these targets right here is the previous Fibonacci targets. They were similar. We hit the first one, and now we've got a new update over here. And what these are telling us, this new 3 fibs that I just talked about, these are the next level of expectations. If we look at the algos and look at what's going on here, we look like we're about to turn back up. The PPM2 is staying positive through here. PPM3 is somewhat flat, and these moving averages are right in here, all very close together. If you look at the numbers here, 39, 39, 39, 49, 39, 32 pp. That's 21, 40, and 200 moving average on this is all just clustered right together here. That's like major support. That's your support vein here. And I'm going to show you one more thing as I clear this out. This is not available to the public yet, but I'll show you. I talk all the time about the market grid and the STX buys and all that stuff. Well, I have an indicator called the STX buy, and what we looked at this, and I've talked about this before on the channel, is that when you get 5 consecutive STX buys with no offsetting RTX buy sell, this is what this number 5 is. It's probably small on your screen, but my cursor is right there. That's the 5. Last time we had that was on September 22nd. Other than we had a little blip here on the 13th of October, we went down, but we got a reversal after printing just below it. We've been basically not on a huge rally upslope, but that has been the low pattern. So we're just seeing this thing unfold. So I'm going to go to the next level here, and we're going to the weekly, and I'm going to bring in some further Fibonacci targets here. And this is S&P, so and the futures. So the next level is 44.66, 47.25, and 48.85. On Sunday night's video that I delivered to you folks, I actually put together I did the monthly and quarterly. And what I was showing you is that the monthly charts are bottoming. So the secular charts are bottoming. And then the quarterly chart is suggesting that we just have this broad trading range. I'm not really expecting any kind of big bull market or anything like that. But what I'm seeing is that the stocks for through this first quarter, probably second quarter into third quarter, are going to trend higher overall. Not all of the stocks, but there's going to be some really nice plays. There's already been some really crazy trades already. I think I looked at the other day, our average portfolio this year is up about 7% right now. And we've got spikes up in the 18, 19% just for this month, depending on what you have in there. And I actually built a meme stock portfolio that right now, like all the crud, you know, everything from GME, you name it, just all the memes. And that thing's up like 45% already this year. It's pretty ridiculous. I was looking at that. Just most of the signals came in right at year end or the first week of January. So it was kind of interesting. So, but this is my general view. I'm tying everything together that I talked about, how the economy's shifting. This is just a bottoming pattern that there's no way around it. I'm going to flip over here and just go to the monthly for a second. Like this is just what this thing looks like. You got upward sloping 40 period moving average through here. PPMs are trying to turn up. If I do the SPX so we can get the algos to work, we need more data. You can see the algos on PPM1 is turning up. This is telling us, and we're already above the 10 period moving average, that we're probably heading up at least, I talked about this the other night, to a 42 handle on the S&P. So pretty in depth on this stuff, but what I'm doing here is putting together and tying together everything, the dialogue of everything switching. This is what's happening. This is what the markets look like, and the level of volatility that we've seen. You can see it by looking at this chart. This is not a log chart. It's just pure price chart. So if you look at this, it's just completely. You see the expanded volatility that we had going back to last January. So this is a much different January than we had last year. If you remember, I talked about an outside reversal on the downside, and someone pointed out, you were really negative last year. I go, yes, I was, and it was the right thing to be. That was the posture to have. Our database got down to 6% long on the intermediate one stage. So basically owned nothing. So what also happened, and just tying everything together I'm talking about, is that the database resetting down to 6-7% long, this whole market got reset. All of these stocks got blown up. There were no trends on the upside to now there's 45% on the intermediate, 70% of the stocks are trending on the upside. And these patterns, I won't go into any more depth than I have already tonight, but these patterns just don't flip. So as always, when I've done these live streams before, let's see how I'm doing. Not too bad, actually. I'm only about 30 minutes in. So the rest of this, I focus on the S&P, and I'll make comments as we go through NASDAQ and the Russell, what the differences are here as far as the patterns and expectations. But this is really what I'm seeing is a lot of bias to the upside, not necessarily new bull market, nothing like that, just not going down. Okay, so looking at a very broad range, and since I went this deep, I'll just touch on it, and then I'll be able to get through the rest of this video tonight fairly quick. So let me go full screen so you can see this. So this is the quarterly chart, and not only did we get outside reversal bar in the month of January. We got the first quarter, and I said if we close lower the second quarter, we'll get at least 3 quarters down. That's exactly what happened. Fourth quarter turnaround, nothing, not like a reversal or anything, but what you see is these moving averages are all sloping upwards, and the algos are suggesting that momentum is going to continue to bleed off. So we're going to set up some kind of giant trading range. If you just look at the expectations here on the quarterly market grid, this is how wide it is. We're looking at STX on the quarterly 3070 and on the RTX 4608. Those are pretty broad range. And we've already printed right now, we're looking at S1 3658. Let me just see where the low so far has been 3794. And so we haven't printed an S1. R1 right now is minimum 4020, so we're above that. 4224 is R2. So I think we probably at least get to 4244. So I think I'm finally done with this. All right, so let's move on. Let's go to the NASDAQ. All right, so the NASDAQ, a little bit different configuration here. The NASDAQ this is the daily, is showing a little bit of a bleeding off of the uptrend, but we're still, this 10-period moving average is going to be your support, 11,689. Last trade here, 11,904. We should stay up. There's also 3 Fibonacci targets. This is not as strong as the S&P is looking from the standpoint of the upward projections. We're not getting these big upward projections out of these patterns. So definitely the tech stocks and the stocks that are primarily controlling all of these indexes, which are highly weighted, are definitely going to keep the NASDAQ not from being the leader. It looks like the S&P, and you'll see here in a second, the Russell are the primary players. Yeah, so I'll leave that alone. But this is the daily. Let's go over to the weekly. You'll see there are some patterns that are here, and when I see a pattern like this, folks, we got those of you who've been in a live room. This rounded bottom here on the market grid, when it forms like this is really just what a bottom looks like. So it's just not, but there are some pretty decent numbers here. We're looking at high target 13,157, 14,177, 14,808. So I'm just going to draw in this, but this pattern is basically a right shoulder pattern. And the Fibonacci projection tool, the Wavetech Fibonacci projection tool, is picking up these patterns. And a lot of times you think, well, they're not going to get hit. Well, you'd be shocked to find out that at least Fib target 1 will get hit, and that's at the 13.1 level. So that's a couple hundred points on a NASDAQ get up here. But I think once you get here, we probably end up coming in between these 2 levels here, which is the 13,150, I'm going to round off, and 14,170. We probably end up coming into this range here. The algos are suggesting that we get just a little bit of flat to sideways yet. And so I'm going to clean this out. But this overall pattern, this is the weekly NASDAQ, it should be a consolidation pattern, and we should start to move up toward these levels. Okay, so looking at the Russell, this is also the weekly. The weekly is kind of muted a little bit, but we've got targets right now, fib targets on the Russell, 1985, 2086, 2149. We've seen these kind of numbers before. We stalled out in the last, but all of these are setting up these right shoulder patterns. And what we're not seeing, at least from the predictive nature of these algos, this is an auto regression model that's being run on the indicators, is that it's suggesting that we're going to see some upside, especially as we come into early February. So this is the weekly chart. If we go to daily, I thought this was interesting because the daily charts are off the Russell now are projecting 2000, 2076, 2019 from that level. So, but there's a but. The algos are suggesting that we're really going to flatten out. So I think we have a little more work to be done in this pattern. But if we can break above these levels here, which we're looking at maybe 1900 or so, 1910, we could start to see this market move quite a bit higher. Okay, I've been looking forward to going through the treasuries, and I know we've printed down into some fairly insane numbers from the standpoint of the treasuries got down to 337. I remember some time ago, once again, I'm going to expand this so you can see this a bit. Let me do one thing here. What you're going to see here, I was talking about these. If you might recall, since it's been 5 weeks, you probably don't, but the expectation was 335. I thought that was pretty ridiculous. This was a Fibonacci target. Well, we hit on the low 337. So we came within 2 ticks of that. Now we're getting fib targets for rates to move back up again around 370, 378. I'll go through the weekly here, and I'll bring up the algos as well, but we'll stay with TradeStation here just for a minute for a couple of things, and we'll go over and look at the algos. So here is the support levels that I also was talking about, looking at the fib target 1. This is really interesting. At least I think it is. If I expand this out just so you can see this, there were 3 fib targets on the weekly. We had 2 things in play. I do recall talking about this being a thing, is we had the fib target 1 on the weekly, 3.375 as a target, was a fib target 1. The low, 3.373. 2/100ths of a tick, spot on. We bounced off there a little bit. Now we do have overhead resistance right now because the downward slope on PPM1 is a minus 0.28, so we have resistance. The cap on the markets right now is around 360. So we could fluctuate here. We're going to call it I'm just going to go 340, 360 on general, but we should start to consolidate here, and the daily charts were showing that up. So let's go over here and let's take a quick look, and let's run the algos here and just see what looking at. This is the daily, kind of flat. Like I said, we got the upward targets here for 387. We're going to call that probably an extreme, which is this fib target 1. If we flip this over to a weekly, you'll see basically the projections for PPM2 are suggesting that the 21 is going to roll over. And I did some of this today. This is very interesting. We spent a lot of time in the live room today talking about just the moving average configurations and how moving averages are. You'll never hear me on this channel talk about head and shoulders bottom, wedges, trend lines, none of that language. And I realized that when I'm speaking and talking, I speak a much different language than most people out there. Everybody's talking about this trend line and the ascending wedges and all this crud that's in Edwards and McGee that never worked. The interpretation of them, at least my interpretation when I read Edwards McGee, was I thought this stuff is always wrong. It's supposed to be a bullish flag, it's bearish flag. I guess if you fade most of that stuff, you'll end up doing pretty good. But I don't do those things. I use moving averages, and I've spent an entire career, really, since 1984. So 1 year off of 40 years of studying not only just moving averages, but these particular moving averages, 10, 21, 40. So I understand how the markets flow around them, what the resistance points are. That's the point of the PPMs, all that stuff. So the point is here is that this configuration is basically a consolidation, the potential for this to set up a low. We do have some downward targets coming in here right now on the weekly for yields to drop to 290, 297, 261, and 339. That's pretty crazy numbers if you think about it. I don't see this as being valid, mainly because what I do see being valid is us trading within the market grid on this. So if you have the indicators, just watch the market grid weekly. That's going to be your expectations from that standpoint. Yeah, so somebody's asking how the PPMs look in 2008. All I can tell you, not only were they negative, but that's one of my claims to fame in 2008, because our models were completely out of that market. And when Lehman happened, we had only 7% of our models were long when Lehman happened. And we turned around in March of 2009 and started buying everything in sight. And it was 2009 was quite the year. So yeah, so that's a really good point. I'm out of sync here. Somebody's asked me what the ES numbers on the for market grid. I usually do my S1, S2, so you have to bear with me. I'm just going to go ahead and finish off tonight. I want to get through a couple markets, but you got the idea here. Let's do crude oil. Just fun to talk about some of the stuff I haven't been able to do. So crude oil is starting to look a little more positive. We got 3 fib targets, 87, 94, 98. So it looks like maybe Biden and the guys are about to pay up for some oil. We're looking at the possibilities of the markets really starting to improve here from the standpoint of pricing. The 10-period moving average is being projected to turn up. This is weekly, by the way. So we're really came down just above the 200-day. The fib target on the downside, which seemed, let me just get these targets down here. They were 86, 71, 62. We printed down to 70.08. So the fib target one over here was the good one at 71.76. We printed right into that. Basically, have stabilized. Same kind of pattern here, folks. There's a bit of a right shoulder. That's what these are. The Wavetech fib projection tool is picking up on this pattern, and this is going on. I'm going to show you folks something here, just so you can see the pattern finder. So this, I just put on the pattern finder just so you could see what this looks like. This is a crazy handy tool. It marks out and tells you, I won't go into details what the blue and red and green lines are, but basically it's showing that right shoulder. It's marked that out. And this is the algorithm that picks up the patterns that figures out the Fibonacci targets. And so this is exactly what it's picking up is this little range right here. It's picking that up from the standpoint of the what the pattern's setting up. So the little right shoulder, at least a projection into those numbers I just mentioned. Been really looking forward to doing gold. Here we go. We've got gold is stabilizing. This is a weekly. I don't know how many of you remember going back in October, November, but I was telling you that the algos are absolutely screaming a huge move on gold. And we'll take a look at this. Hopefully the algos, I've got enough data here that I can get the weeklies to, the monthlies to work. But this is a big move that's happening here. We actually satisfied the Fibonacci target that was out there a while back. We did get into that range. Targets were 17, 1820, 1854. I remember discussing these. And now 1854 is your big pivot in this pattern. If we took that out, we would see a reversal of this trend, probably fall all the way back into moving averages. Right now, based on what's going on with the algos, there's very low probability on seeing that. And let me bear with me 1 second here. So I'm going to bring something on screen for you, just so you can see this. And I talk about these PPMs all the time, but this is the probability map of the PPMs, and this is why we're not in the parabolic curve, but I think we're in gold. We're in this extended peak value, and we're probably going to see some of the primary PPMs get up to a pretty crazy level here from the standpoint of the angle of attack. So this is the angle of attack probability map that I recently did. And so just real quick, I'll mention I haven't been active on my Substack account, but I'm writing an article on these PPMs right now that I think you're going to like a lot. And it's going through all the details and how these things work and all that, and how to build this probability map and what this is all about. But this is classic. So if you notice, PPM1 is at a 1.04. I was just showing a probability map for that extended move is about 1.2. So we're hitting maxes here from the standpoint of the ultimate pattern. We actually got up to 1.3 at the peak. So that's typical what these extended moves look like. And so what we're likely to see here is that a high level consolidation. So let's go over to the monthly, and I'll go full screen here. So I want you to see the monthly. PPM1 is suggesting that the 10-month moving average is going to move up, start to turn up, which then tells you something really, really crazy. These fib targets that are way up here look like they've been invalidated, but my expectation is out of this pattern, we're going to get a new fib targets up here. And these fib targets over here, believe it or not, 2495, 2800, and 3000 on gold. So the minimum is 2495. I'm anxious to see what comes out of this pattern, but we have to get this to generate. We're going to have to take out the $2,000 level. Once that happens, then we're going to get some really crazy numbers on gold. And right now, just looking at this monthly chart, we're in the final week of this month, right? So we're seeing that from the extreme level, RXT is 1944 and high 1949. So basically, we printed RXT on the gold on a monthly. We get, actually, it's not till, what is it? Monday, Tuesday is where the update comes. But if you have the indicators, you'll know what these numbers are. But it looks like this thing is expanding, and a lot of folks might think you missed it. Maybe there's a way to find some retracement here. But this is what I'm going to take a minute because so I'm trying to say go through something here with you folks. is if this is what's going to happen on gold. Let me go full screen. This is what's going to happen on gold. What does that really mean? Is it inflation? Is there something else going on? Is this, so there's a conflict here. But I think there's some big cash flow. So I'm going to draw something in here. So this is what this larger pattern is potentially going to look like. I'll do my best to draw this in. But so this is the big pattern here is you get this big 1, 2, and then you have this little minor pattern here. What these will ultimately project is a move up here, and at least to the levels that I just mentioned. Let me change this line here. At least to these levels right here. I'll try to draw these as straight as I can up into this zone here. So we're looking at greater than 2,000 gold, and it's just, yeah, it looks like it's going to happen, folks. We're looking at $2,400 gold, and like I said, what does this mean? You folks should know by now that I always do this. I always do this reverse fundamentals, like what's going to cause gold to do that. So I don't have that answer right now, but whether I don't think it's inflation. I don't think gold's proven to be an inflation hedge of any sort, but I do see it as an alternative asset, whether maybe this restructuring, all these things that I was talking about earlier in my rant as we started, maybe that's the case. But for right now, this looks like a reality, but we need to penetrate. Once we penetrate 2,000 on gold, and this is a monthly chart, so this is a really big chart here to take a look at. I've never tried something. I'm going to try something. I'll go full screen if it works. It does work. So, so this goes back to going off the gold standard. We'll go a little more in depth here on gold tonight, but this goes all the way back. This chart goes back to 1976, and so these are big patterns. And unfortunately, I don't. I'm going to do one thing real quick here, folks. I'm going to change the inputs here. I'm going to change this to a look back of 50. If you have the indicators, by the way, and you're not getting the algos aren't working, it's because you don't have enough data. I'm shortening this data here. So now the algos are working. I could do that for all three, but we'll just do it for this one. But this is quarterly chart. So this is a 3-month chart in gold. So this is super long term, and we're looking at the algos are suggesting that we are going to see the 10-quarter moving average move up. So to do that 10-quarter moving average, let me give you a value of 1817. So we just need to remain above that number, into the 18 handle. And it looks like there's a good chance 1880, 84 is pretty good support. So I suspect that we'll stay at this level. Okay, so let's do the final look here, and let's go to Bitcoin. Okay, so let me adjust the scaling a little bit here. I think Bitcoin is trying to peak out here. I'm going to show you a couple of things. I'm going to show you on TradingView. You'll see that all the PPMs turned up really sharply right out of this base here and projected out. There was also a pivot right here at 17.3. Once we got above that, it was breakout time. And this is the daily. I'll go weekly, and then we'll go over and I'll show you the models on this. So if you do have Wavetech, you probably go GBTC, and you should see a buy signal there on that, on the daily. But this is weekly model. I'm just trying to reset some of the scaling here. So PPM1 on a weekly is suggesting we're going to stay positive. We're at 3.88 level, which is pretty much it's not, if you look at it on a really close end, it's not really a true parabolic curve, but the values of there are substantial. So the major support 18.4, 18.6 are the numbers to watch for. There's also support, minor support 21.8 here at the moment. And we're looking at last trade 23.195. So this pattern is starting to top. This is starting to top here, and but it's going to stay in an upward bias. We'll probably stay underneath the 200 as 26.65. 20. I'm sorry, I'm getting Skype messages from an associate, but we're looking at the 20. That 226,535 is a cap. But overall, we should see an upward bias. Those numbers I mentioned should be the end of that. All right, I come back on screen. Thanks, everybody. We did about an hour, so that was fun getting through all the markets. Haven't had a chance to look at some of your comments, but appreciate the participation, and gonna get this thing back up and running. We do have 270 folks watching, so not quite like the old days. These are, I saw somebody comment they like the lives better. I do too. I can go in a lot of depth and really unpack a lot of thoughts. And anyway, it's good stuff. These are really easy to do. All the analysis that you see when I do this are not premeditated, but actually real-time analysis. Some of the stuff I look at on the S&P ahead of time, and the primary markets that I'm involved in, I have a acute awareness. Just real quick, when I was sick, I remember when I was coming out of the cloud, last Thursday, by the way, was my first day truly setting up vertical. So that was a nice moment last week, a week ago. So it's good to be back. It's awesome to have all the really nice things that you people are saying. I mean, no trolls. That's amazing. On my Twitter account, nobody. So the trolls are coming back, which are a good thing, because those are the ones that let us know when we're really right. So let's look at let's see here. I'm just looking at a couple comments here. Yeah. So someday I'll do a true podcast. You'll see more of my humor. But anyway, thank you so much. It's yeah. My wife said one. This is a funny joke. She actually said I looked like Palpatine last week at one stage. It was pretty ugly. It was pretty bad. So anyway, nice to be here, be alive, and be with all you in the community. So thanks again for watching. Make sure you, before you leave, hit the like button. Let's get 1,000 likes for Bob being back, right? Let's get that going. I should have said that early, but let's like it. If you're watching, I don't know how many likes there are, but let's get this going. So appreciate it, everyone. This is it. we'll see you. Not sure what you'll see tomorrow night. I'll let you know if there's another live. We'll figure this out. I'm still trying to figure out how to put Humpty Dumpty back together after being shut down for 5 weeks. Anyway, talk to you folks soon. Thanks for watching.